Hey there, it's Oscar here, and today I'm breaking down the recent stock market crash for you. So grab your coffee, and let's dive in. First up, let's talk about aggressive economic policies under the Trump administration. We saw tariffs being slapped left and right, and significant federal spending cuts that had everyone on edge. Treasury Secretary Scott Bessent called this a necessary detox period from government spending. But let's be real, it's got investors biting their nails and worrying about a potential recession. Next, trade tensions with our neighbors up north, Canada, have not helped the situation. Tariffs and retaliatory measures have thrown a wrench in economic relations, creating uncertainty across various sectors. It's like watching a ping-pong match where everyone loses. Then, we've got global economic challenges piling on. The ongoing crisis in China's property sector is causing shockwaves around the globe, and instability in major economies is shaking investor confidence. It's a domino effect, folks. So, what's been happening with the markets recently? Well, major U.S. stock indices have taken quite a hit. The Nasdaq Composite Index has entered correction territory, and the Dow Jones Industrial Average is experiencing substantial losses. On March 10th, stocks slumped again due to fears about tariffs and a potential recession. The S&P 500 fell 3.1%, which is the largest decline since September. The Dow dropped around 500 points, and the Nasdaq slumped over 3.3%. It's been a wild and negative week on Wall Street. Over the weekend of March 8th and 9th, Trump didn't rule out the possibility of a recession, calling this a period of transition. Meanwhile, Commerce Secretary Howard Lutnick confidently stated, "There's no chance of a recession." Mixed messages much? Now let's not forget the market performance from 2023 to 2024. The S&P 500 surged 53.2%, and the Nasdaq Composite soared 84.5%. But it's 2025 now, and both indices are in the red year-to-date. The Nasdaq is down over 9% from its 52-week high, and some experts are warning that if it sells off another 10% quickly, we could be looking at a crash. Speaking of experts, Jim Walker from Alethea Capital predicts a 10% decline in the US dollar and forecasts an economic slowdown. Painful but manageable, not a 2008-style crisis. He's long-term bullish on copper due to the green energy transition, and recommends investing in Indian equities, citing stable policies and economic expansion. So what should you do during a crash? Here's some advice. Don't get caught up in the market noise. Don't overhaul your investment strategy based on short-term price action. And don't be complacent. Review your portfolio and focus on strong companies. Alright, that's a wrap for today. If you found this video helpful, give it a thumbs up and subscribe for more updates. Remember, more millionaires are made in recessions. Thanks for watching, and I'll see you next time.